Imagine waking up tomorrow morning, checking your phone, and seeing money deposited into your account without working extra hours, driving for Uber, or starting a side hustle. Sounds too good to be true. Well, some investors are doing exactly that through dividend stocks. But here's the shocking part. Most beginners choose the wrong dividend stocks and end up earning tiny payouts while taking huge risks. In this video, I'll show you what dividend stocks are, why they're so popular among wealthy investors, and the types of dividend stocks beginners should focus on. And stay until the end because I'll reveal the biggest dividend investing mistake that destroys returns for thousands of investors every year. Let's begin. First, what exactly is a dividend stock? A dividend stock is simply a company that shares a portion of its profits with shareholders. Think about it like this. Imagine you own a small piece of a successful business. That business earns money. Instead of keeping all the profits, it sends some of that money directly to you. That's a dividend. This is one reason why terms like dividend stocks, passive income, and best stocks to buy now are searched millions of times every year. People love the idea of earning income without constantly buying and selling stocks. But here's where many beginners get confused. They think the highest dividend yield automatically means the best investment. That's not true, and it can be a very expensive mistake. Let's say one company pays a 3% dividend, another pays 12%. Most beginners immediately choose the 12% option. But what if that company is struggling? What if profits are falling? What if the dividend gets cut next year? Suddenly that attractive yield doesn't look so attractive anymore. That's why smart investors focus on quality first and yield second. Remember that, because it might save you thousands of dollars over your investing lifetime. Now let's talk about what many experienced investors look for in dividend stocks. Number 1. Consistent dividend payments. A company that has paid dividends for years or even decades demonstrates financial stability. Number 2. Growing dividends. Some companies increase their dividends year after year. This means your income can potentially grow over time. Number 3. Strong business fundamentals. Profitable companies tend to have a better chance of maintaining dividend payments during difficult economic periods. These characteristics are often more important than simply chasing the highest yield. Now here's something most people never think about. Why do many wealthy investors love dividend stocks? The answer isn't just income, it's psychology. When markets become volatile, investors often panic. Stock prices fall. Fear spreads. People start selling. But dividend investors often have something powerful: cash flow. Even when stock prices fluctuate, dividends may continue arriving. This can help investors stay disciplined instead of making emotional decisions. And emotional investing is one of the biggest wealth destroyers in the stock market. Now let's discuss diversification. Imagine putting all your money into a single dividend stock. What happens if that company struggles? Your income could be affected immediately. That's why many investors spread their money across multiple dividend-paying companies and sectors. Some focus on consumer goods. Others prefer healthcare. Some like utilities. Others add financial companies. Diversification helps reduce risk while creating multiple income streams. And that's a concept beginners often overlook. But before you rush out and buy dividend stocks, there's one important warning. Not every dividend stock is a good dividend stock. Some companies offer unusually high yields because investors expect problems ahead. In other words, the yield may be high because the market sees danger. That's why experienced investors don't ask, "What's the highest dividend yield?" Instead, they ask, "Can this company keep paying and growing its dividend in the future?" That question changes everything. Now let's talk about the biggest dividend investing mistake. Ready? Focusing only on income. Many beginners ignore total return. A stock paying a large dividend isn't automatically a great investment if the stock price keeps falling. The best dividend investments often combine reliable dividends, growing dividends, and long-term business growth. That's the combination many successful investors seek. So what's the biggest takeaway from today's video? Dividend investing isn't about getting rich overnight. It's about building a growing stream of income from quality businesses over time. The investors who succeed are usually not the ones chasing the highest yields. They're the ones choosing strong companies, staying patient, and allowing compounding to work its magic. And that's the same strategy many long-term wealth builders have followed for decades. Now here's my question for you. If you could own only one type of investment for the next 10 years, would you choose dividend stocks, growth stocks, or index funds? Let me know in the comments. And if you enjoyed this video, don't forget to like, subscribe, and turn on notifications because we'll be covering more investing, passive income, and wealth building strategies very soon.